The S&P 500 daily cloud chart shows the lagging line 26 bars back, making it above the bottom of the cloud 26 bars back again. And there's another day at that level, then it starts ticking up for the bottom of the cloud. And price in the pre-market hours for the S&P 500 at 7:35 a.m. Central Time on the 17th is right there, 43.55. So it's still hanging around this level at the bottom of the cloud, 26 bars back. And that makes it a gray area at 43.55.53. The daily baseline is pretty close in current price, 43.64.22. And the still valid disqualified trend factor down to at 43.51 is still there too. And zigzag is holding its own. It would for sure take at least 4 bars in a row of lower ATR, 4 bars back for each day to get that swing point to the downside anchored here at the D wave down wave 4 where it printed. And on this lower high compared to this bar on the 12th, a qualified supply line was qualified here, so, and that's at 43.73.24, and an open below that level will surely disqualify this qualified supply line. And this ongoing supply line to start the day is at 44.29.11, and it would need to either open above it for this morning on the 17th and then close above it for end of day on the 17th to qualify that, or it could gap up before it and then continue on and close above it for end of day today on the 17th, and it will be qualified. If it gaps up below it and then comes back down and then goes back up, it will be disqualified if it closes above it. It needs to gap up and keep going. And the other way is to have a low, I haven't calculated it, it would be quite low, maybe down by the conversion line, and then turn around and head back up and close above it, and it will become qualified for end of day on the 17th that way too. And the price flip to the sell setup 1 count happened, so now we need to go on the Royal Flush run and print the sell setup 9 end count to negate this combo by countdown 12 sequence. Until that happens, this is hanging over our heads down here. And the 20 EMA in solid blue right here is still below price in the pre-market hours, and this is at 43.45.96, and to the upside is the 50 EMA in solid gold here at 43.77.76. So it's right in between those two, and that's a familiar place to be for S&P price. And it looks like it will start the day below the cloud baseline 43.64.22. So another familiar place to be for S&P price between the conversion line in current price and the daily baseline in current price. The conversion line needs to get above the baseline before we can go anywhere serious to the upside. Right now it looks like a consolidation pattern, and if this supply line qualified can hold for this morning, there is a good chance at more upside. The QQE ticked up and almost to 50, so that's a pretty good sign there. And the upper Stark band went sideways for yesterday, so it needs to get back pointed up. The lower Stark band is still pointed up, but if that trend continues and the lower Stark band rolls over or goes sideways like this, then there could be potential trouble. For right now, we know that price is pretty much within the no man's land, and that's reflected here because it's right in between the upper Bollinger Band and Stark Band and Channel 3 high, and right in between all the ones to the downside. Here's the lower Stark Band, Channel 3 low, and the arc down 3.618 level, and the Bollinger Band is lagging behind way down here, 4181.43. And here's the Rock 1 PPO extreme down here, and ATR2, and the Rock 1 went above the positive volatility line and closed above it, 1.06 or 5. And the ATR2 is above 50 at 57.34, and that's positive volatility and nonetheless volatility, as we have been visiting the negative volatility line at -1 below there right here, and now a couple times in positive, so we're in a slight volatility regime.